Good afternoon and welcome to GrainTV. It's December 27, 2012. To my left is Logan Burgess and I'm Brock Shimbino. We saw a low volume trade today in Chicago. Let's turn over to fire tip to see what happened. Corn was down 1 1/4 cents, soybeans off 5 1/4, wheat in Chicago down 2 1/2, and Kansas City was off 1 3/4. You know, as we head towards the end of the year here, Logan, I think we're going to see some low volume, some position evening, some profit taking before we end up the year here in a couple days.
Yeah.
But really, soybeans had a two-sided trade. We saw them positive early on in the session. We saw it turn negative later on. What was kind of the driving force there?
Yeah, soybeans was taking a good bounce here early in the session, Brock. We saw that January contract trading up 8 or 10 cents in the early going. At that time, we did see the deferred months lagging behind the front January contract there. It seems like continued good news out of South America in terms of precipitation has been weighing on those contracts if you look out August 13 and beyond. But front month contracts really were finding some strength here. It seemed like, though, at midday, some more macro concerns, conversations about the fiscal cliff started to weigh on this grain market here. A lot of red on the board today, as we were mentioning, and we had Harry Reid come out today and say that in his opinion he does not see a resolution coming down the line here. Is that a huge surprise to the market for people that have been watching this? No, I really don't think it is, but it's confirmation of it. Anytime you have Harry Reid come out and say that, it certainly does put a negative tone on market action. It seemed like, whether we like it or not, that did spill over into the grain market here today.
I think a lot of the uncertainty about the fiscal cliff and the economic uncertainty about next year, what's going to happen.
Right.
I think that was weighing on the outside markets. We saw the Dow Jones off pretty sharply as we headed towards the end of the session here today. And we saw the livestock markets down as well. Crude oil was off a little bit. I think really this all came over and flowed into the other commodities, corn, soybeans, and wheat. This morning we also had a little bit of downside pressure lent by what Taiwan had to come out and say. Their sugar corporation actually did not make any purchases on their tender for 23,000 metric tons of corn, 12,000 metric tons of soybeans. They cited too high of prices right now in the United States for them to be purchasing. So that's kind of negative, especially as far as export sales are concerned. Tomorrow we do get the export sales report.
Right.
What are the expectations for tomorrow?
Yeah, Brock, for wheat, we're expecting the trade's expecting between 500 and 700,000 metric tons reported there of U.S. wheat. For corn, 150 to 300,000 metric tons. And for beans, 100 to 300,000 metric tons. If you've been watching us here for a while, we've been reporting on this export sales figure for beans. That's quite a bit lower than what we've seen in recent weeks, and that's a result of those cancellations from the Chinese that we saw last week. And those on net were about 500,000 metric tons. So certainly a big dent there in the weekly number. The thing, though, about this is that once we have those cancellations kind of behind us here, I think that beans in particular are going to be able to start focusing back on the fundamentals here in the coming weeks as we approach the quarterly grain stocks report and the January WASDE report. Brock, the one thing I think that people should keep in mind is although we did see those cancellations, soybeans has been moving lower. Right now we're about 208 million bushels ahead of pace to meet USDA expectations according to our model. So I think it's good to keep in mind the big picture here on beans. Certainly a much different story than corn right now. Fundamentally, this bean market still remains strong. We will have to see, though, what the USDA comes out with in the quarterly grain stocks and the January WASDE.
In corn we are running quite a bit behind pace. Our expectations or inspections this year is actually about 78 million bushels behind pace. So we are running well behind pace on corn. That's going to have to be addressed in the January report. Something else we get on tomorrow for corn demand is ethanol numbers from the EIA. We also get that tomorrow. That's going to be delayed, just like export sales.
Right.
So tomorrow we do get a little bit of fundamental news from the ethanol industry and from export sales. So that's something we'll have to pay attention to for tomorrow.
Yeah, in coming weeks here, according to our model, ethanol production has been behind pace to meet USDA expectations. Corn export sales have been behind pace, but the one big thing we're going to be keeping an eye on in that quarterly grain stocks report is the feed number. That's kind of the wild card in this corn market right here that could give things a little bit of a bump. But we'll keep you posted on all the expectations for those two big reports here as we move toward them. Brock, I think, though, that kind of wraps up what we saw today in the grain market here on GrainTV. Thanks a lot for joining us here on a Thursday afternoon, guys. Have a great evening. We'll see you tomorrow.